Welcome back to Crypto Asset Catalyst, where we break down the real forces shaping digital assets and global finance in 2026 and beyond. Today's episode is all about Ripple, the XRP ledger, and how their latest acquisitions and ventures are setting up a new infrastructure layer for tokenized real-world assets and institutional liquidity. In this episode, we're going to look at Ripple's evolving business model, recent multi-billion-dollar acquisitions, ventures like Evernorth, and how platforms like Ripple Prime and bank-grade custody and trust structures all converge into one clear theme. XRPL, real-world asset tokenization, and AI liquidity are reshaping the global financial landscape in 2026. So if you hold XRP, you're watching from the sidelines, or you're an institution trying to understand what Ripple is really building, stay tuned. Disclaimer, this is not financial advice, for informational purposes only. Here's Ripple's 2026 big picture. Let's start with where Ripple stands going into 2026. Over the last 2 years, Ripple has shifted from being seen mainly as a cross-border payments company to becoming a broader institutional infrastructure provider, covering custody, treasury, payments, and now prime brokerage. They've raised significant capital, including a roughly $500 million strategic investment round that pushed Ripple's valuation toward the $40 billion mark, signaling strong institutional confidence in their vision. At the same time, Ripple's leadership has signaled that 2026 is less about starting new acquisition sprees and more about consolidating and integrating what they've already bought, turning all these pieces into a unified institutional-grade platform. That integration phase is key if you're thinking about XRPL as a serious backbone for tokenized assets and real-time liquidity. So think of Ripple in 2026 as a kind of crypto infrastructure conglomerate that's aligning prime brokerage, corporate treasury, custody, and liquidity around XRP, RLUSD-style stablecoins, and the XRPL. Next, we dig into Ripple Prime. Ripple Prime is a core pillar of Ripple's stack. It grew from Ripple's acquisition of Hidden Road, a global prime broker clearing over $3 trillion a year for hundreds of institutions. Ripple reportedly paid about $1.25 billion, one of the crypto industry's largest deals. By rebranding that business as Ripple Prime, Ripple effectively became the first crypto company to own and operate a global multi-asset prime broker targeting the largest institutional players. What does that mean in practice? It means that instead of just selling XRP-powered payment corridors, Ripple now offers prime brokerage services for institutions that need access across multiple digital assets, and integrated clearing and collateral management, where XRP and Ripple's own institutional stablecoin can potentially be used as collateral or margin. A unified platform where large funds, trading firms, and corporates can interact with digital assets without stitching together 10 different service providers. From the RWA tokenization angle, Ripple Prime is the gateway that lets large institutions access tokenized treasuries, tokenized bonds, or tokenized invoices on the XRPL with the level of service and risk management they expect from traditional prime brokers. So when we say XRPL, real-world asset tokenization, and AI liquidity are reshaping the global financial landscape, Ripple Prime is the institutional on-ramp that makes that statement credible rather than just a narrative. Now custody, trust, and bank-grade infrastructure. Prime brokerage is one side of the story, the other is custody and trust. Back in 2024, Ripple acquired Standard Custody and Trust Company, a regulated custodian with trust powers, to expand its licenses and custody capabilities. This acquisition gave Ripple a foundation to offer bank-grade custody, qualified trust services, and regulatory coverage that are essential if you want to hold tokenized government bonds, corporate debt, or tokenized funds on-chain. On top of this, Ripple has continued to pursue licenses and acquisitions in key jurisdictions. For example, in early 2026, they moved to acquire BC Payments in Australia to secure a local financial services license and deepen their payments and institutional footprint in the Asia-Pacific region. Ripple's payment volume in APAC reportedly doubled in 2025, underscoring how important that region is for the company's growth. When you combine a trust-grade custodian like Standard Custody, a growing set of regulated entities in key markets like Australia, and their existing payments and ODL-style infrastructure, you get the skeleton of what you might think of as a Ripple Trust Bank model, a globally distributed, regulated stack focused on holding digital assets, tokenized RWAs, and facilitating compliant flows across borders. For institutions, this matters because no one is going to put billions in tokenized treasuries or tokenized commercial paper onto a chain that doesn't have serious custody, trust, and regulatory infrastructure around it. Ripple is deliberately filling that gap. Let's cover treasury, payments, and the corporate side. Now let's move to the corporate treasury and payments angle. Ripple's acquisition of G-Treasury, a major treasury management platform handling trillions in payment volume, reportedly cost around $1 billion and plugged Ripple directly into the $120+ trillion corporate treasury market. They also acquired Rail, a stablecoin payments platform processing around 10% of global B2B stablecoin flows, for about $200 million. These acquisitions mean that Ripple isn't only targeting banks and exchanges, they're embedding themselves into the back office pipes of large corporates and financial institutions. By integrating XRP and Ripple's institutional stablecoin across these platforms, they can power instant on-chain settlement for B2B payments, tokenized cash and short-term instruments used for liquidity management, real-time AI-assisted routing of flows across corridors and assets. So if a corporate treasury wants to hold tokenized US treasuries on XRPL, use a Ripple stablecoin for operating flows, and tap on demand liquidity in emerging markets, Ripple's stack, prime brokerage, treasury, and payments can orchestrate that. This is exactly where AI-driven liquidity strategies come in. You have a programmable ledger, XRPL, tokenized RWAs, and a rich data stream from treasury and payment systems that algorithms can use to optimize cash positioning, FX exposure, and collateral in real time. Evernorth, XRP Treasury, and XRPL infrastructure next. Next, we have Evernorth, a Ripple-backed venture that plays a strategic role in XRP and XRPL infrastructure. Evernorth is moving to go public with over $1 billion in expected gross proceeds, with significant participation from Ripple, RippleWorks, SBI, Pantera, Kraken, GSR, and even Ripple co-founder Chris Larsen. The majority of that capital is earmarked for open market purchases of XRP to build what could become the world's leading institutional XRP treasury. In other words, Evernorth is positioning itself as a large, publicly visible balance sheet vehicle dedicated to accumulating and managing XRP at institutional scale. That's important because it gives institutions a familiar listed entity through which to gain exposure, access structured products, or tap liquidity tied directly to XRP. On the infrastructure side, Evernorth has partnered with Doppler Finance to build out robust institutional infrastructure for XRP and XRPL assets. This partnership targets the long-standing barrier in digital assets, the need for reliable, compliant, high-performance systems that traditional finance can trust. Evernorth brings capital and institutional relationships, while Doppler delivers the on-chain infrastructure for revenue generation and institutional service delivery. Together, they are building a bridge between TradFi requirements and XRPL's capabilities, which directly supports tokenized RWAs, structured yield products, and other complex instruments on the ledger. So when you look at Ripple Prime, custody and trust, treasury and payments, and Evernorth's institutional XRP treasury, you start to see a coordinated ecosystem forming around XRP and XRPL as a base layer for tokenized financial products. Ripple's strategy for 2026 and beyond. Let's zoom out and talk strategy. Reports and public commentary suggest that after a massive acquisition spree in 2024 and 2025, spending over $2.4 to $2.5 billion on deals, Ripple plans to slow down new acquisitions in 2026 and focus on integrating what they have. They've raised around $500 million at a roughly $40 billion valuation, and they're orienting the business more tightly around institutional clients, stablecoin infrastructure, custody, treasury, and prime brokerage. From a macro perspective, Ripple's goal seems clear. Make XRPL and XRP part of the core plumbing of global finance, not just speculative assets. Use regulated entities, trust companies, licensed payment institutions, and potentially bank-like structures to meet institutional requirements. Leverage Evernorth and other ventures to deepen XRP liquidity and build a visible institutional footprint. Tie it all together with AI-driven liquidity and risk engines that optimize how capital flows across corridors, assets, and instruments on XRPL. If they execute, XRPL becomes not just a payment rail, but a settlement and collateral layer for tokenized bonds, tokenized funds, tokenized cash, and more, backed by a full stack of services that feel familiar to banks and corporates. Let's bring it back to the core thesis of this episode. XRPL, real-world asset tokenization, and AI liquidity are reshaping the global financial landscape in 2026. Ripple's acquisitions, Hidden Road, rebranded as Ripple Prime, G Treasury, Rail, and Standard Custody, aren't random deals. They're strategic moves to own key layers of the institutional stack: Prime brokerage, Treasury payments, and custody. Evernorth and its partnership with Doppler Finance add another layer, building institutional-grade infrastructure and a large XRP treasury that reinforces XRPL's position as a serious venue for tokenized assets. For XRP holders, the big question is not just price action, it's whether this architecture actually becomes embedded into how banks, corporates, and asset managers move money and manage collateral. For institutions, the question is whether XRPL and Ripple's ecosystem offer enough regulatory clarity, liquidity, and tooling to justify making the jump. In future episodes, we'll dig into specific RWA use cases on XRPL, like tokenized treasuries, on-chain trade finance, and tokenized receivables, and how they might impact XRP demand and velocity. If you found this breakdown useful, hit like, subscribe to Crypto Asset Catalyst. See you in the next video.